The new orders are primarily from India. So we have a large order of around 640 crores, which has come from TAN Transco, which is an SCB in Tamil Nadu. Plus, we have an order of around 200 crores on railway electrification from Core, and then a few other orders of 64 crores from PGCIL and SCB. So together, this is around 900 crores, and primarily this is all from India.
Okay, fair point. After this 901 crore rupee order, what does it take your total order book to, and what's the order pipeline looking like? Share that with us.
Sure. Current year order inflow has been closer to 9,300 plus crores, which is 50% higher than what we got in the previous years. We expect our order book to be around in the range of 12,000 to 12,500 crores at the end of 31st March, with a healthy mix of 60% being domestic and 40% being international.
Are these orders which are still enjoying legacy margins, or there's a marked improvement there?
So the average margin on order book continues to be in the range of 10 to 11%. So it's different depending upon the segment as well as depending upon which client we're working with. But yes, our order book has a margin which is in the range of 10 to 11%.
The reason I'm asking you this question is because when I speak to some of your peers, they are very upfront in indicating that, look, we had a baggage problem, which is our old legacy order book, which we were forced to take at lower margins. Now the trend is changing. So the new order book not only is coming at better margins, it also will have an impact on operating leverage. Do you think that same phenomenon could be at play for Kalpataru also?
No, I don't think so. That's a phenomenon for Kalpataru. So historically, last 3-4 years, our margin levels have been in the 10 to 11% range. So we never had this issue of a legacy order book with lower margin. So effectively, it continues to be as it is.
Okay, fair point. Just want to talk about the growth levels as well, because we believe that you're set to record a CAGR growth of 16% in revenue over FY 17 to 20. Are you on track to deliver these steady growth performances?
Yeah, we had targeted a growth of around 15% for the current year, which I believe we are on track to achieve that. Given our order book visibility, we should definitely be targeting a growth of 15 to 20% for next year also. And this entire growth continues with profitable margins in the range of 10 to 11%. So I think at least the next couple of years, the growth is visible given the visibility of order book.
If you look at the state of discoms, I'm afraid, Manish, nothing has changed there. The Uday scheme has not really moved the way it was projected to move. Could this have an impact on the way you do business and the way future order book would move?
So a lot of our orders with state electricity boards and discoms are funded in nature. Some of them funded by REC, some of them funded by PFC, some of them funded by KFW and others. So from our order book perspective, a lot of our order book is secured by back-end funding which the SCBs have. On a larger front, I think SCBs will continue to be a big opportunity for us given the kind of requirement they have on the transmission network in the next 3 to 5 years.
What about the power grid business? How's that looking? What is your guidance there?
So we've seen the power grid business being active in the last 3 months, not as active as in the previous few years, but I expect that business also to grow as compared to what happened in the current year. So this year was not as good in terms of power grid for the transmission business specifically. We had some good orders from power grid on railways, but not on transmission. I expect this to improve getting into the next few years.
When we spoke